Okay, good morning, everyone, and welcome to BIMA Trading with the market reel for September 30th. Today, we will do our technical analysis, look up at the market psychology, and look for some trades if any shows up today. So, before we go any further, how is everyone doing? Did you guys get a good night of sleep? Are you guys fresh in front of your computer this morning? I hope you guys are all doing good. Now, as we go along, if you guys have ever any question or anything, don't be shy. Just type them in into the chat box or the Q&A box, and I will be with you right away. Okay, so before we go any further, just give me a second right here. I just want, there you go. Give me a sec. Um, okay, there you go. Awesome. So before we go any further, okay, we're gonna look at our disclaimer this morning. Okay, take a second right here to read this little disclaimer. Trading security futures involve the risk of loss, including the possibility of loss greater than your initial investment. Security futures may not be suitable for all investors. Prior to buying or selling a security future, a person must receive a copy of the risk disclosure statement for security futures contract. Copies are available from your broker and from the National Futures Association at www.nfa.futures.org. This webinar is for educational purposes only. In no way should you consider this trade room to be a trade call service. If you choose to take a trade, you do so of your own accord. Bima the Trading Yogi is in no way responsible for your gain or your loss. Now, that being said, um, I am letting you guys know all of my trades are live trades on a live real funded account. So if I take a trade, I take a real one. Okay, so now that being said, let's go back to our chart. Okay, perfect. So let me bring up my chart right here. Okay, quick little questions, right? Before we do our technical analysis today, and here you guys grab your chat box. Awesome, you're very welcome. Good morning, John. Good morning, Jose. Good morning, everyone. Sorry if I don't always answer the chat right away. This is a new software I'm using, and sometimes I don't look at everywhere to see where all my messages are. Right. So, anyways, let's move forward. So, to be able to apply the right technical analysis, we have to have the right. We have to have the right we need to apply the right analysis plan, right? So we need to figure what type of day do we have today. So let me ask you, right? What type of day are we having, right? There's three types of days that we can experience. We can have trending day, we can have range day, or we can have trend into a range. So what type of day are we having today? Are we having a range day? Are we having a trending day? Or are we having a range into a trend, right? You guys can answer in the chat box right here. And then right after, I will apply the proper technical analysis. So right here, second there. Okay. There you go, right? So on our three type of day, we have trend into a range, we have range day, and we have trending day, right? In any case that it's a bull trend or a bear trend, we have trending days, we have range days, and we have trend into a range. So what type of day are we having today? Well, I'm looking at my scope right now, and I can say with confidence that we have a trending day, right? This is what we have right now. Let me bring back our chart right here. There you go. So as you can see, this market has been trending into a channel since the beginning of the morning. So let me grab right here. Let me grab my channel line. All right, we're going to draw our channel line, copy right here. There you go. And now we see we have a channel, right? So now that we have a channel, we're going to start looking for a reversal line for zone of support and resistance. And then after, we'll wait for a pullback, right, to be able to get into the market, to look for some trades. So just give me give me a second, guys. I forgot to get some water. Just give me a second. I'll go get some water and I'll be right back. I've got a dry mouth this morning. Okay, sorry about that, guys. Oh, let me take this away. Perfect. I'm not sure why this happened this way. Okay. So, perfect. So now we have a few rules, right? When we trade, there's a few rules that we have to follow to be profitable, right? As they say, plan your trade and trade your plan. This is very important, or else we start to trade with feeling, and this is when it starts to cost money, right? And we don't want that. We do not like that at all. We don't like to lose money. Not that losing money is not part of the plan, but we don't like to lose money on gambles, right? We don't mind losing money when everything was picture perfect. We've taken all the right decision, and yet the market did not pan out what it was supposed to give. But we don't like to lose money on some what do you call it there, on some gamble, right? So I'm going to start to do a few technical analysis here. First and foremost, right, I'm going to start to look where we might have some reversal line, right? Some reversal zone wherever the market reaches that section, something happens, right? So let's start to look what we have right here. Okay, right here, we can see we have, there you go. Right here, we have a zone that at first, it was a resistance, right? Right here, it was a resistance. But then, right here, it became a support zone. So that's a stackable area that we can feel confidence, right? That some buyers right now are waiting to take control of the market. They're just waiting for the right pullback. So this is a zone of interest, right? And then after, we're going to use our retracement tool, and we're going to look for an area where the pullback is gives value to our trade, right? And what does that mean to give value to our trade? Just give me a second here. I'm going to pull my line right there. So we've got our 38.2 area, and then I'm going to bring up this one right here because I'm pretty sure that this one will be in play. And go like this. There you go. Okay. Okay, so we see right now that our reversal line, right, at the zone of 61.8 is a zone of interest, right? And so let's talk a little bit about the Fibonacci retracement tool, and why the 38.2 and the 61.8 area are a zone of interest. Well, it's very simple. We don't trade the market. We don't trade the price action. We don't trade the value of the S&P. None of this makes any importance to our decision making. We trade the market psychology, right? And what does that mean? Well, we don't trade the market. We trade the traders. And the 38.2 zone and the 61.8 zones are zones of interest simply because people believe that there are areas of interest. That is all. They're self-fulfilled prophecy. That's what they are. That's merely what they are, right? There's no magic number. There's no equation that you can do that's going to predict the future. But what we can predict is the behavior of the traders. And when you're in a trade and you're looking at this movement right here, right? Let's say that you weren't in front of your computer at 8 a.m. this morning and you didn't get a buy signal. You see this big movement, right? You see this big movement right here, going all the way up. And you're like, oh, geez, I wish I was able to profit on that, right? I wish I could have gotten into the trade. So right now, you're going to wait for the market to come back down, give some value at either the 38.2 area, but I believe today that the 61.8 area would be more into play to then give us a pattern that would take the market all the way back up, right? Does that make sense? Do you guys understand what I'm trying to explain here? Again, answer in the chat box. Your comment and question always help the class to move along, right? So anyways, that being said, now we look right here at this movement, and you might be asking, right, why are we not taking this trade, right? We have a nice little spike right here. Well, it's very simple, right? The first and foremost thing is we never trade from 9:30 till 9:35, 9:40. We do not touch the market because it becomes very volatile, because that's when we have a flux of traders sitting in front of the computer getting ready to trade the market, right? This is a trap that I've got caught in more than once in my trading career. And yeah, I got to know that the opening bell, 9:30, even if you're 100% sure, like right this morning, the market was very bullish, and you could have taken a good guesstimate that you could have taken a trade and be profitable. But in reality, at 9:30, it could have very well been just went and crumpled down before going back up. So for that reason, we do not touch the market at 9:30 in the morning. Then we also, from 10 to 10:05, it is the 10 o'clock shock. Often you will see a big move or a reversal at 10 a.m. So we do not touch the market at 10 a.m. to 10:05, right? This is when they set the price of gold, and for some reason, for a very, very long time, the market does a jerk at often does a jerk, right? Because anything I'm saying are just how can we call this? They're just observation of market condition, but they're not set in stone, right? They can change all the time, and this is what makes the futures market so interesting to trade, right? Because every day. Every day there's how can I say this? There's different personality moving the market in a different direction or another. And the question from John here: is anyone chatting? I only see my chat. No, John, you're the only one chatting right now. Nobody else has posted in the chat box, so no worries. Okay, so now that being said, we see right now that the market, right, just went a little higher. It overshoot the it overshot the channel. And what does that mean? Well, it can mean a lot of things, but often when you see the market overshooting, right? If we take right here, we'll go like this. Whenever you see the market overshoot in one direction, it will try to repeat the next one right here, right? So right here, we can expect, a second, right here is where we could expect the market to give us a pattern. Well, hopefully it will give us a pattern that we can trade, right? Now you might ask why I am not changing my channel. I am not readjusting my Fibonacci retracement. Well, the reason is very simple. Is, as I just said, this is an overshoot. It is not. It does not negate our channel just yet. Now, if it starts to use this line right here, right? If it starts to use this line right here as a support line, then we'll start to consider to readjust our channel, maybe with something that's going to look like this, right? But that we'll see. Just right now, we're not there just yet, right? So in the meantime, right, what kind of charting software do you guys use, right? Are you using Sierra Chart, MT4? Are you using Ninja Trader? What are you guys using? Thinkorswim, awesome. Anybody else? Not very active. Go. Okay. Anyways, that being said, right now it's going to start to be a waiting game as of right now, right? So let's take a minute, look at everything else that we got to keep an eye on for today. Let me bring up this window right here. So today, what do we have to be mindful, right? This morning we had at 7 a.m. we had some speakers, reports. At 9:30 at the opening bell, we had the Neil Kashkari speak. Then after at 10 a.m., right, at 10 a.m. we have the consensus for the sell index coming out. So we might see a little jerk right there. And then at 10:30, we have the petroleum report. So those are all time of the day that we need to be careful to keep an eye on, especially the 10 a.m. and the 10:30 petroleum report, right? And this one is a major one, makes the market move a little bit. So we'll see what's going to pan out from there. Perfect. So in the meantime, here, let's maybe you guys don't want to chat so much. It's all right. Maybe you want to answer some poll question. Let me know, how long have you been trading, right? How long have you been a trader? Give me an idea of what to talk about. If we've got some beginners in the house, if you've got some seasoned traders, some 5 years trader. Oh, wow, that's really nice. So for 5+ years as a trader, have you been able to be profitable so far, or you're still on the break-even, losing streak? And we have right here 6 months to 1 year, 0 to 6 months. Very good. There you go. Let's show the results to everyone. Perfect. So we've got both beginners and a seasoned trader in the room. That's cool. And now using your chat box, right, to answer what type of trader, unless I mean, I can always create a new poll, But let's see. Let's see here if you guys answer in the chat box, right? What type of traders are you guys? Are you a day trader? Are you a swing trader? Are you a pattern trader, momentum trader, order flow trader? What type of traders do you guys do? Intraday, that's cool. Mostly trading the NASDAQ, that's really cool. Mix and success using DD Pro, nice. Short-term day on ES, that's nice. Well, for us, you'll see that we're going to spend probably 95% of our time on the S&P, right? For some time, I was looking at the gold and the crude, but I didn't manage to become profitable on those one. It was always break even, and in its sense, I don't like the volume that goes into, like if we look right this morning, right, the E-mini, the S&P E-mini traded for 500,000 contracts so far, right? We've got good volume today compared to the gold that has 120,000 contract traded, and same thing for the crude oil, right? Only 120,000 contract traded. So that in itself, it's no good for it's no good for us. I like to see a high volume day, right? Because on low volume day we have high volatility, and when we have high volatility, we got to keep our stop loss like at a greater distance, and when we're wrong, it hurts, right? It really hurts. So for myself, I found comfort in the E-mini. I like the personality. It's the market that it is the most traded in the world. So it offers some very good trading opportunity. Usually, right, we'll find at least 3 to 5 trades per week, give or take, with the S&P, with the trading plan that I have in place. We have about 3 to 5 trading opportunities. So that being said, yeah, so we trade the E-mini mostly. Just when it gets very, very sluggish, we might look at other market, but for all intended purposes, the E-mini is plenty. Right, I'm not one of those traders that has a 50 computer screen. I only have 2 computer screen. One is for my charting software, and the other one is to interact with you guys or to look at my stocks or whatnot. Right, this is what I'm mainly looking into. And as speaking as stock, I just went to look what they look like this morning, right? As in my trading plan, the profit we make on the futures, while we send into the stocks, so they can give us some dividend and they can grow over time, right? As a trader, it's not so much about spending the money, but more about accumulating wealth. Anyways, so that being said, let me just look right here whereabouts we are. I think we can start to readjust maybe a little bit our, give me a second, our channel, just to see what that's gonna do. Right, there you go. So maybe the channel's a little bit more like this, right? And maybe we'll see a pattern come up around this area right here or below. Right, we're not sure. We're just going to be careful. We'll see what's going to happen, because now there's no overshoot, right? There's no overshoot. So if there's no overshoot in this channel, then the 61.8 zone might not be in play anymore, and the 38.2 might take over. So again, we'll see, right? We trade what we see, not what we want to see. Yeah. So just give me a second here, guys. Okay, so are you guys full-time traders? Right? Are you guys doing this full-time? Are you wanting to do this full-time? Do you guys own businesses or job? As for myself, right, just to give you a little indication of who I am and what I do. Well, this is my day job, right? I do this professionally every single day. But as you know, well, not as you know, the trade room closes at 8 a.m. and I usually keep trading until maybe 9 a.m. Western time, right? I mean, I'm on the West Coast, so on the Eastern Standard Time, um, I stopped trading at 11 a.m. and but the trade room closed at 11 a.m. and I usually keep the scope open until 11:30 until noon. Then at noon I'm done for the day. I own some property short-term vacation rentals and a restaurant and some websites and a touring company and whatnot. So for the rest of the day, I keep myself busy with other things and I use mainly the futures market, right, to edge my accounts, right? So some days might not be good elsewhere, and it'll do just fine on the market. So we've got a good day, even if we don't book tours, even if we don't have people booking the vacation rentals and whatnot. So for that reason, I don't need to trade every single day. I don't need to take those trades, and this is very important, right? Because if you are a full-time trader and this is your only source of income and you've got a smaller account, right? If you have an account that's smaller than $30,000, um, and I know this because I got caught into that trap, then you get stressed that you need to make money, right? You want to make money, you're stressed about making money, and then you start to take bad decisions. So it's always good when you're a trader, especially when you trade, you're a day trader and you're trading the futures market, that you have a second source of income to take away that stress that we put on our shoulder, right? That we need to be making money every single day. If you do not have that second income, then you need to be extremely disciplined in your craft, right? You need to be very attentive to what you are doing because, again, as I just said, you will start to imply what the market should be doing and you'll start taking bad decision accordingly, right? So anyways, for that reason, if you guys don't have a second source of income, I do hope that you guys are really, really, really disciplined in your craft, right? So from John, you're full-time working, the COVID, that's been this whole craziness of COVID, it's been just insane. I can't wait for this to go away, right? I just can't wait for this to go away. So anyways, that being said, right now it is a waiting game. Our technical analysis for now are done, right? There's not much that we can do, and we're going to wait for the market to offer something. So in the meantime, right, is there anything you guys have any question, right? Is there something that you want me to elaborate on? That is either technical analysis, you want to talk about the contract, the rollover, the brokers, your trading software, anything. If you guys have a question, now is the time. It helps to move the class forward. And if not, in the meantime, we're going to keep an eye on the market. We're going to wait for the market to give us the right trading opportunity. And here in the meantime, I'm going to launch a poll. Retired, there you go. We have Ken right here, retired at 51 to be a full-time trader. No complaint yet at age 69. I use a tick bar chart mostly and trade off at 21 EMA. Okay, well, that's good. Yeah, as you can see, we also have our 21 EMA. Age 69. So you've been trading for quite some times now, right? For 18 years, give or take. That's pretty cool. right here. So you're pretty much a naked trader. Do you use a pattern scan to trade the market, or are you just simply trading off the EMA? Yeah. Very good. Very good. So trade reversal, some use patterns. Very good. And for Ken, on your trend trade, how is that, right? How long do you keep your trades, your position open on a trend trade? And has this been profitable for you over your 18 years experience, right? Okay, I'm gonna try another retracement line right here. And the reason that being, right, because I don't believe that the 61.8 area is in play anymore, right? So we're going to remove that. We're going to remove where we thought, well, not remove, right? We might just, we're going to remove it, but we'll keep in mind this area that it could offer a pattern, right? We thought it was offering a pattern. Maybe it will offer a pattern. We'll see. Uh, we'll see what's going to happen here. But since the market keeps melting up, right? It keeps going up without really giving us any patterns or anything. We're gonna we just draw another 38.2 line because this area. Let me take my drawing tool right here. Right, this portion right here. This spike might not be into play anymore because it suffered from time decay, right? It's been a while since this area has been retested, and I'm pretty sure that the most trader drew their channel the way we just did, right? They drew their channel just the way we did. Let me just adjust this here because for some reason, even when I lock them, and this I'm going to send an email to Sierra chart, but even when I lock my channel line, um, they often move as the market move anyways. So I'm going to see why this is going on. That being said, this area right here, right, this area right here, I believe, whoops, this area right here, I believe it suffered time decay and people are not keeping it in play anymore. Well, most people are not keeping it in play anymore and are going to probably start using the retracement from here to here, right? So for that reason, we just drew another 38.2 line, and now we're going to have an area right here, right? We're going to have an area right here where I believe that the pattern is going to happen if we have one that happens today, right? We do have here a little support line, right? Right here. Right here, we can see a little support line. So as the market goes up, if the market condition states so, we might see, right? We might see the market do something like this and then back up, right? We might look for a pattern in that area, but really I would like to see something come down all the way down here, right? It's a little nested pattern. That would be the best for us today. That would give us value to our trade. So let's kind of come back here to Ken. Ken says we have some reversal, but mostly trend trade. 1 second to as much as 2-3 hours, right? Well, that I fully agree with you. But for myself, I like to be in the market really from 30 seconds to 5 minutes, no more than 20 minutes, right? If I go more than 20 minutes, unless it is like a winner, like a runner, like I like to call them, I don't like to be more in the market than 20 minutes, right? It makes me nervous. When for some reason I get into a trade and then the market dies down and it starts to oscillate into a range, that I'm really not comfortable in those trades, right? So anyways, that being said, let's keep on waiting what's going to happen here. As a trader, right? As a trader, we always have to be careful. And we have to be very, very patient, right? We have to be mindful of our mind, of our thoughts, and what we are hoping to happen, right? Because I can look at this right here, and then we'll figure that right from here, right? And we can see it touch here, it went up, touch here, it went up. So maybe when it touch here, it's going to go up again because I've been waiting all morning for a trade. I don't see my trade. I don't have my pattern. I want to make some money. I wait that it retraces to the EMA. Once it touched the EMA, I'm going to take it back up. Well, this is when we lose money. This is when we lose all of our money, and we got to be very careful to not let that happen. Give me a second here. There you go. It is a waiting game. So in the meantime, right now, let me just grab this right here. I'm gonna bring up this. Why is it not showing it in the application? Okay. Right here, right, we have my journal. So every day I keep a journal of what is going on. I keep a journal for my trades. I keep a personal journal for my mind. I keep a personal journal for, well, pretty much everything, right? My projects and whatnot. It's always a good thing to go back to and look, look back at the end of the week, and adjust ourselves accordingly, right, to what's been going on in the market, the observation that we've made and whatnot. So obviously, we're gonna go September 30th futures. Okay, so today's market conditions are not ideal at the present time. The market is melting up, offering little to no trading opportunities. Oops, made a mistake here. Patience, and discipline is a must today. Like a cougar waiting to strike. And why am I putting this down? Why am I writing this? Well, wait. There you go. So I will get back to this in a bit, right? I will go back to my journal as the day progresses, right? As the morning keeps going. Now it's 10 o'clock shock. We stay away from the market for the next 5 minutes for sure. So let's bring back the charts right now. There you go. Okay, so the reason why I take the time to write down the market condition as the day progress, well, it's simply or merely the next time that I see the same market condition, I'll know how to behave myself, and I'll have my my warnings, if you want, into place, right? Because again, as I said, it is easy just to look at the market right now and just say, well, I'm gonna buy every time it touches the EMA, right? I'm gonna buy here, I'm gonna buy here, I'm gonna buy here. But before you get the guts to say, okay, I'm gonna buy the EMA, it has to retest a few times. And after it retests a few times, well, often, right, after 3-4 retests, it's gonna just crumble down. So we can't take with confidence a trade and hope to be profitable. And if we do take a trade today, the chance that we might be profitable tomorrow are slim to none. And there's a good chance that if we take we feel confident that today's trade was good, then tomorrow we'll take it again, and yeah, we'll lose money, and we don't want that. So anyways, that being said, we'll readjust slightly our slightly go like this instead, erase it, but we'll adjust our lines, make sure. There you go. So we see again the market keeps going up and up again. So we'll wait that it's going to show that it wants to give us back a pullback, and then we'll readjust our 38.2 lines, right? Our retracement line. So let's take this away from for now. This one, we'll adjust it all the way up here, right? So we see right up here with this reversal line that we saw earlier. Sorry, not a reversal line, but support line. There you go. Right here. We're going to wait for the market to give us our pullback, right? We want it to give us our pullback, give us our pattern, and then take a long position. So I'm just readjusting my lines, my analysis. There you go. So now let's hope that the market is going to offer us a good trading opportunity this morning. Again, in the meantime, if you guys have any question, feel free to go ahead. You got a Q&A box. You can ask question, or you in the chat box as well. 7:05. So in the past, around 10:15, 10:20, the market has given us, I would say, like quite often, some patterns to trade, some opportunity to trade. So let's hope that something's going to happen today, right? Let's hope so. Something soon. Good. Sorry, in the meantime, while we're waiting, I'm just looking real quick at my stocks, see what they're doing. Good. Just look right here. Give me a second there. Just looking, right? I'm just trying to make sense of what's happening right now. You can see right here, we got a, oops. Just gotta be careful here, right? Got a big, nice drop this morning during the overnight session. Just got to be careful, mindful about that. Okay, so let's see what's going to happen. Still, let's see what's going to happen. Starting to see our retracement. So let's, again, from here, I'm going to bring it up another 38.2. We're going to put it right there. And the reason why I'm calculating my 38.2 from the minor area, the minor leg, sorry, instead of the major leg right here, it's simply because we've been in the melt up condition, and maybe today that's all she's going to offer, right? Maybe that's all she's going to be able to give. It's the a small 38.2 pullback. Now, again, I would like to see it come back all the way to this area right here. This is where I would like to see the market pull back. But as we can see today, she might not offer this, right? So let's see what she's going to do. Just adjust this for you guys. Look at that, right? There are days like this where there's not much we can do. We just can stay idle in the sideline and wait for a play to get into play. Yeah. not much we can do in the meantime. Let's just wait to see what's going to happen. Mornings like this can be very, very brutal. Very brutal. So in the meantime, guys, are you following on your, do you guys have your charting software open, or are you just following on my screen? Both? That's cool. And John, let me see, John, you're using Thinkorswim, right? That's what you're using to trade. On Thinkorswim, how much does a contract cost you to get you into the market, right? What's a trade on Trade Nova? Okay. Trade Nova, you have like a futures broker, or do you have a stock broker that allows you to trade futures? Oh, that's cool. And how much does a round trip cost you, right, to get in and get out? $6, $8? Oh, that's cool. Very nice. Just check something here. Oh, that's cool. And the coach, is he from Trade Nova, or you've got another coach on the side? Separate. Okay, that's good. Very good. Same as my for myself, right? I for first time, well, not first time, but I blew two account until I realized that I needed to have a trading a mentor to teach me. Um, yeah, but I guess if you want to call yourself a professional trader, you need to have blown at least one account, right? Nobody managed to. Well, I haven't met anyone, anyways, that managed to trade on the future and didn't blow their first account. So yeah, great to see that you guys have mentors. That's awesome. So this is really, really hard today to trade the market, right? Because the bears keeps, sorry, the bulls keeps pushing the market up. They don't let the bears take control of it for one bit, and it's not giving us any entry, right? We could be gamblers. We could be putting a order right here and says, okay, I'm getting in right now. But that being said, there's no historical pattern that gives us any sort of confidence that we're going to make money, right? The market just could very well go and melt down back to this morning's low, right? We could see the market just keep going all the way down. Uh, so without a pattern, it's really hard for us to get in. And days like this are the hardest one to keep discipline and keep our mind sharp. Because right now, like my mind, every time I see the candle wanting to cross the EMA, I'm like, oh, okay, maybe I can get in, right? Because we want to make money. And this is where our discipline is so important. We need to keep our mind sharp and on top, just allowing the market to do whatever it has to do until it gives us the pattern that we need. So 716, no patterns, no pullback. And now it almost looks like the market wants to move into a range, right? It almost looks like it wants to move into a range. So we'll see. We'll see what's going to happen. We see we have a little bit of sellers getting into the market, right? We have a little bit of sellers getting into the market. So maybe this is going to do a flag. I don't know. And not. Again, if you guys have any questions, if there's a subject you want me to talk about, don't be shy, just post it in. If I trade the NASDAQ, no. Just posting to panelists, all panelists. No, your message is from John to all panelists and attendee, right? Everyone should be seeing your chat, but you're pretty much the only one talking. We had somebody else in class, but he left a few minutes ago. So you're the only one talking right now, John. But that being said, no, I do not trade the NASDAQ. NASDAQ is pretty much the exact same thing as the S&P. And for myself, I'm more comfortable with the S&P. I've been trading the S&P for 3 years now. So, yeah. Is as trader, we need to learn the personality of the market, right? This is very, very important. Give me a second. This one right here. So the NASDAQ traders usually stick with the NASDAQ, same as with the futures traders, or else it's just way too much information in front of us. And for myself, it's not. Yes, well, that's it. It's because the ES has so is the most traded market. It's a lot less volatile, and when it goes into a direction, it tends to stick to it for a bit. But now it looks like we're we transition into a range, right? So let's see what's going to happen here. Sorry about that. Sorry about that. Seven trades so far, and +3. My weakness is patience. Once in the trade, scalped a lot and miss good runners. Yes, well, that is John. That is most traders' downfall, right? Is and I'm the same as you. There's days in my career where I've taken 20, 25 trade into the day and barely broke even. And then over time, I've realized that the when I'm most disciplined and when I take the least trade, not that you cannot take multiple trade in a day, but if you have into your trading plan to trade the least amount of trade as possible, then you start to condition your mind to look for the right patterns and the right market condition and the market psychology. And then your decision making ability becomes becomes a lot sharper, right? And like I said, and if you go back and you look at your statistic, right, and you look at all your past trades, so on and so forth, you will see, I'm pretty sure that on days that you took less trade are the days that you were the most profitable, right? So 7 trades so far, and which is good right now because you do not have a commission to pay to your broker, right? But nonetheless, right, it's still costing you $200 for the month. But if it would have been what do you call it there? If those trades would have been a commission, well, that would have been a $6 every single time. So a loss of 42 for a gain of 150. So a profit of a little bit under, a little bit under $100, right? So not that it's not good, right? And if you can stay like this and you're probably profitable, 7 trade, 3 points. So you probably have what, maybe 3 losers, yeah, 3 or 4 losers and 2, 3 winners, give or take, right? And hopefully your winners are bigger than your loser, because that's another thing, right? If we talk about, right, let me take this up here for a second. Let's talk about this. If we talk about trade management, if every time, right, if every time you win, you pocket in 1 or 2 points, but every time you lose, you lose 2 to 3 points, right? 2 to 3 points. Okay, let me see. What did you write? A lot, and I missed the runner. 1 is minus 15 points, right? So there you go. And minus 15 point on a day like today, that's a high day, right? Our volatility index is not all that high. So you mean 15 ticks, right? Not 15 points, or is it 15 points, John, that you lost? 15 points or 15 ticks? Okay, so 15. on a put order, or okay, points. There you go. No problem. Okay, so you lost 15 points. Wow, that that hurts, right? Disaster stop at 15. Okay, well, here's how I manage my trade and how I calculate my and it's good. It's going to give us something to talk about while we wait for a pullback here. Okay, see, I'll give you an example. For myself, I take anywhere between 2 to 4 contracts, right? 2 to 4 contracts. How many contracts do you take at a time, John? So I take 2 to 4 contracts. And my first target is at 2.5 points. Okay, your target is at 4 to 5 points. Okay. And then after, my stop loss is at 2.5 points. Right? So by doing so, what happens, right, is I will put, give me a second here. Okay. Why are you doing this to me? Okay. Okay. I don't know why it's happening like this. Give me a second. Okay. There you go. Okay. Awesome. So this is, let's say, a trending day and whatnot. And in this area right here, we got our pattern to get into it, right? Well, I will always put my stop 1 tick below, 1 or 2 tick, right, depending on market condition, below my setup, right? And then after the size, right, let me change the color here. And then after the size of my setup is the size of my first target, right? There you go. Just give me a sec. So what I do is when I get into the market, right? When I put in my buy order right here, I put my first target right there, right? The size of my setup is the size of my first target. Then after, my second target will be at the previous high, right? This is where, because the market always wants to retest, right, the previous high, and then often they'll give a pullback before it's going to go up. And then after, my third and last stop, I'm going to put it at my measured move, right? I'm going to measure this right here. Then after, it's going to give me a pullback. And then after, I'm going to put my stop, right? I'm going to put my stop where my measured move, right? I'm going to take the previous leg, and then after, I'm going to paste it on top, and then I'm going to go put my target at the top all the way up there. And then after, when I hit my first target, right? When I hit my first target, my stop loss will come up to my break-even point, right? So if it hits the target and then it reverses, then it kicks me out, protects my profit, and then I'm good. I'm good to have I've got a winner on the day. And then after, if I get a runner, then the runner is going to take me up, right? And the same thing, if you have 2 contracts, you have one on top here, then you put your second right there at the day's high. Then after, when you hit your first target, you move your stop loss to your break-even point. And once you see if it has big momentum and it has movement, then you can bring your stop to the day's high, to the measured move, right? The measured move. And then after you trail, instead of keeping your stop loss at your point of entry, you trail your stop loss 2 to 3 candles behind the price action, right? So risk out 4.5 target point. It's on yes, it's -5 target point 2 and 5. Okay, so anyways, that being said, John, and by doing it so this way, right, because you're going to get runners at least 30% of the time, right? This is when you're going to get your runners at least 30% of the time. Sorry. And then after, you'll minimize your loss. Well, now how do we calculate our stop loss for the day, right? How do we do this? How do we calculate our stop loss for the day? And don't worry, I'm keeping an eye on on the market, right? We can see right here, if I bring back the chart, we can see, right, that it's we've just moved into a range right now. As I predicted, it gave us a big spike. So now we're gonna look to our trading plan is going to be a spike into a range, and we're going to look for the market to give us a pullback, right, somewhere around here with a pattern, and then after we'll get into the market. So just to know where to look at, because the 38.2 will not be in play anymore, I will just do a expansion to figure out where my standard deviation are, and I'm going to wait for the market to retrace at least into the second deviation before getting long into the market, because we always follow the overall trend, right? So anyways, that being said, let's go back to our whiteboard. So how do we calculate our ATR? Just give me a second. I'm going to bring back the chart just because I need information on the chart to be able to do so. So we'll do the calculation on the chart right here, right? We're going to do it in this area right there. Give me a second. There you go. So if we look, right, if we look all the way down here, right, the indicator for our average true range, we see this right there. Our average true range is 1.8 right now, almost 1.9, correct? Just want to get a second. I want to see if we speak. Okay, so the average true range is our volatility index, right? This is what this indicator is telling us how to calculate our stop loss for the day, right? We never put it always at the same place where there's no point to do so. We do so according to the market condition. So if we look at the market today, the market has a 1.9, right? We're going to calculate at 1.9 average true range volatility index. And to calculate how many ticks is our stop loss, many ticks, I'll put a capital M, sorry about that. And if you didn't realize just yet, I am French, so sometimes I can make a little bit of mistakes in English, so no worries. How many ticks is our stop loss, right? With an average true range of 1.9, well, we take 1.9 times, right, 1.5 as a buffer. That would equal, and let me bring up our calendar, 1.9 times 1.5, and a calculator, not calendar, right? It gives us a 2.85 points time 4 ticks, right? Time 4 points. There you go, right? And then that's going to give us 2.5 times 4, 11.4. 11.4, right? So 11.4 ticks, or, right, or, well, 11.4 ticks, we're going to round that up, right? We're going to round that up to 12 ticks, or 3 points, right? This is how we calculate our stop loss. So when we're going to put in our orders into the market, we're going to put it no greater, and this is how we're going to determine how we get into the market and what type of orders we're going to put in. Are we going to put in a right here a stop limit order, right? Give me a second. Are we going to put right here oh, just give me a second. Let's put the chart. This one I did there you go. Okay, sorry about that. So we'll come right here. We'll go, we can either put in a on a long position a buy stop limit or a buy limit, right? And to put a buy stop limit, right, let me just turn on the simulator mode on so I don't get filled. There you go. So we can come right here and put a buy stop limit below the price, wait for the market, right? Wait for the market to retrace, give us our pattern before it goes back up, right? So our entry point would be right here. We can either bring our order right below it, and once it comes down and touches it, then we're filled. Or if the ATR is over our trade, our risk management, right? Because we never trade, we don't want to trade more than no more than 5% of our account, and we would like to be around 1 or 2% of our account, right? So we can also do a limit order, right? We can do a buy limit order, and then whoops, just give me a second. That's not what I wanted. Let's see, this is why. Buy limit order. And just give me a second here. Why is this doing this to me right now? Oh, okay, because I'm in simulator mode. Okay, it's just it has not well been. I didn't program it well into my my simulator, right? When I trade with my on live account, that's not an issue. It's only when I'm in the simulator mode. So I'll fix this so I can show you guys tomorrow how to put in a limit order. But that being said, when I have a limit, when I put in my limit order, I will let the market retrace all the way to my entry point and then put in my order, so I can respect, right? I can respect my right? So I can respect my volatility index and my trade management, right? This is very, very important. So 740 right now, and then the market just pushed through our, give me a second, it just pushed through our range. So here's something that most likely going to happen, right? We're going to see it come right here. It went up. It's going to go like this. Then we're going to see something like that, give us our pattern, and then take it all the way back up, right? Hopefully, anyways, this is what we're going to see. It might go up to the second standard deviation, but because of the range acts as a magnet, and the market is always going to want to try to retrace back to that magnet, right? Or to reach up back to the magnet. So anyways, that being said, again, It's a weightings game. And I hope that you guys understood what I was talking about a risk management. If you want me to elaborate a bit more or have any question, please do so. Ask them into the chat box or the Q&A box, and I will answer them right away. So 20 minutes left to our trading session. Hopefully the market is going to give us something that would be really, really nice. The market died down a little bit, right? We had some good volumes in the overnight session. We had over $400,000 contract traded. And then right now we've got 750,000 contract traded for the overall day. That's really low. I would expect it to be a bit more busy, right? A bit more action today. Look right here. These stocks are doing good. Let's just hold and see. Hold and see. So let's see if we're going to get our pullback, if we're going to get a pattern, hopefully something before 11 a.m. Eastern Standard Time. Give me a second. I'm going to answer a text from my son. I've been waiting for a call for a week from him. Sorry about that. Send money. You want me to send you some money, John? Okay, back into the range. Man, this is brutal. Oh, your son text. No, it's he's on he went back east to see the family. He's coming back soon and we need to make some arrangement. So that's why I've been trying to call him for a week now, but he's with his friends partying. So young guy still, yeah, he's 19 years old. Yeah, still very young. I'm grooming him right now to be to take over the family business, right? All of this, everything we're building right now is for my son and daughter. My daughter's 20, and my son is 19. Yeah, it's pretty awesome. I'm waiting for him to come back. I have a small diner. It was under renovation. Renovation just finished, so we're gonna reopen it, and in the upcoming week. So I'm just planning to see when he's coming back and everything, so we can. He's going to be taking care of the restaurant. So if you guys, we're going to start talking about end of day right now, right? If you guys trade in the afternoon session, right? The afternoon session starting at the 12:30. Be very careful. Be very, very careful for today, because often when we see melt up days like today that don't offer a lot of entry, uh, and they reach their target, right? Because the market is always trying to reach a certain target, and which it did today, right? It retested. Give me a second, right? It retested to this morning's high, right? The overnight session high. So now we got to be careful, right? That the market does not give back everything that it has taken today, right? So right here, we could see patterns happening. Just give me a second. In this area right here, and then in this area right here, but to go back up, right? This is one of the possibility, but we could very well also see the market just go and then give everything back that it has taken this morning, right? This is a very big possibility. So be very careful and adjust your trading plan accordingly to the market condition, right? It's not because it went up all morning that it's going to keep on going up all morning. So let's see what's going to happen here. 12 minutes left to go. Man, it's brutal. Days like, I hate days like this. I hate days like this. Right? It's really hard to keep the how can I call this, the discipline when nothing is happening, right? And especially well, when you're teaching, right, you would like to show a good trade to the class, and it's very brutal. So anyways, that being said, it's a good day because we didn't lose any money, right? That's always a good thing. So we have no more news coming. What does tomorrow look like? Tomorrow looks like it's going to be a big day. We've got John William that speaks at 11. We've got natural gas report at 10:30. We've got manufacturing report at 11. We've got the personal income consensus, the job claim consensus coming out at 8:30. So tomorrow should be a very interesting day. Tomorrow tomorrow should be a higher volume day. Sometimes the best trade is no trade. I need to practice. Yes, 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 very much so, John. You are very right. And again, this is what I say, right? Because on days that we trade too much, and those are often days that we're not profitable, it's really hard on the psyche of the trader to feel confident to take the right position and then make money. So often what's going to happen is we'll develop the gambler's mind, right? We'll lose so much that at some point we'll state to ourselves, well, the next one has to be a winner, right? I've lost so much that now the next one has to be a winner. Well, The market doesn't have to be anything at all. Who said this before? Let me just search this on Google right here. The market can stay irrational longer then you can be profitable. Sorry, the market can remain irrational longer than you can remain solvent, right? And this was, who said this, right? The quote was from, come on, give me the name. I like to know the name of quotes. I don't know why. Okay, so John Maynard, right? The famous economist John Maynard says that the market can remain irrational a lot longer than you can remain solvent. So for that reason, the last trade has no bearing on your next trade, right? Even if your last 20 trades were lost, the next one does not have to be a winner. So yes, the best trade often is no trade at all. And if you trade the right way, the proper way, right? And if you're patient and if you're disciplined into your trade, what is going to happen, right? What is going to happen? Well, first of all, you will strengthen your decision-making muscle. But then again, you're going to take the right profitable trade, right? You're going to wait for the trade that's going to give you the best value as possible. And then you're going to get more runner. You might only be taking 1, 2, or maybe 3 trade in your week. But if those 1, 2, or 3 trades in your week give you a return of, let's say, 200 to 1,500, right? Let's say you get 2 trade at 200 and 1 trade at 1,500. That is a $1,900 day. That's a $1,900 day. A $1,900 week. Sorry, not day, but a $1,900 week. That ain't bad. That ain't bad because if you take, I don't know, what, $1,000 per week for salary, you still have $900 back into your trading account to grow your account, right? To take bigger position. Now, my day goal is 20 to 30 points a day. Do you often reach that day goal? Do you reach that 20, 30 points? Or do you get like 10 points, lose 15, gain back 10, lose 5, and then make 5, so your day's at 5 points for the day? And then you give it back 3 days. I stop at day done. Okay, I see. Well, I'm not sure if to have a set a goal per day is a good idea. That I really don't know. But in my personal opinion, this is something that can hinder you because at the end of the day, if you did not see or choose the right trade, you will feel down on yourself. You will have the impression that you're not taking the right decision. And I know this because I had the exact same philosophy at some point in my trading career, right? Where, well, I need to do this many points per day. Well, today I don't calculate at all my trade on a day-to-day things, but rather on a contract to contract period, right? The S&P is a 3 months contract period. So within that 3 months, I'm gonna trade to be profitable. It doesn't matter if this week, like it happened. Like, I've been, especially during the market crash, right after March 12th. There are days and even weeks that I didn't even touch the market. I looked at it. I kept idle on the sidelines. And I'm very happy that I did so because I didn't lose any money, right? My biggest loss during the market crash was $1,000. That was my biggest loss. Because at the end of the day, for myself, when I start to take, if I take 2 trades and they're losing trade, well, my mind right away is going to ask itself the first question: do I know what's going on right now? Right? Am I trying to yield the market to my will? Right? Am I saying like the market is going to do what I want it to do? And if I catch myself doing so, right? If I catch myself looking at the market and not really knowing where it's going to go, right? Where I'm trying to take trades in areas where the support and the resistance hasn't been tested, that there was no retracement, there was no pattern. Then I tell myself that right now I am in no condition to be trading, and I walk away. And this wisdom came with, like I said, like I blew two accounts, and then and often, not often, but it happened also a couple of times in the previous years where I would be profitable for sometimes, right, a couple weeks, maybe a month in a row, where I did not get any losing trade, or maybe just a small loss of a couple points, and then after I would get back a re-entry, I get back on it, and now I feel like God, like I'm the best trader. I cannot take a bad decision. And those days when in my mind, like I cannot take a bad decision, those were my most costly days, right? One day I lost over $4,000 because I was trying to yield the market to my will. And now today I have the discipline. After two trades, two losing trades, if I'm not figuring out what's going on, if I haven't done my proper analysis and I don't have a clear view of what is going on in the market, I just walk away. Because to try to make back the money you just lost, you run into a chance to lose more than you made in the first place, or lose more than you already lost, just because you're tilting, right? In poker, I'm also a poker player, and we call this tilting, right? You start to tilt, and you're trying to wield the market, and those are the worst day ever. So for that reason, I'm not sure if setting a goal for every single day on a target to reach is the right thing. Now, not that reaching a goal is not a good thing, because every day you need to have your goal, but your goal might be more oriented on your trading psychology, on your state of mind, and on things that you want to that you want to perfection, or you want to improve on, right? As you just said for yourself, I need to practice days, the best days, like, sorry, the no trades or good trades, right? Well, yes, practice that. Let me ask you something, John. Do you have a pattern in itself that you trade, or do you have a something that is profitable for you, that you repeat day in and day out, and then when you know that you see this pattern, you make money? And if you do so, I will suggest to you, right? This is what I'm going to suggest, that you give yourself the rule, let's say for 1 week, that you take no trades at all, unless all of those what do you call it there, all of those rules are filled, right? And I'll give you an example right here. Just give me a second, right? I'll give you an example of my rules, right? The first one is never gamble trade past 10:30, right? And what I mean by never gamble trade by 10:30, well, if like sometimes in the morning we can see a trade that might not be picture perfect, but with experience, with market condition, we know, right, that this pattern often pans out. If it's before 10:30, I might get into it. Like, to give you an example, right here, right, in this, come on, in this area right here, right, this right here, we see we get a pullback, 1-2 zone of support, whatnot. This is a trade that I could have taken, but not after 10:30, because it did not give me the proper retracement, so on and so forth. Never after 10:30. Okay, so that being said, sorry, right here. So I never trade past 10:30. Then after, I never trade. Whoops. Never trade at the opening bell and at 10, right? I never trade past those times, because often I've seen over time, and this comes from my coach, right? And again, guys, if you guys are ever interested and you want to follow a full trading course, like I opened the trade room, but I am nowhere near what my coach is offering as a trading course. So if you guys are ever interested, let me know, and I'll send you all of his contact information, right? And these rules, most of them comes from my coach, and I follow them religiously. And whenever I derive from them, this is when I register some loss, right? Then after, I'm gonna wait for a strong impulse, right? I'm gonna wait for a strong impulse move, right? Then after, I never chase the market, right? I never chase the market. As you can see right here with all those spikes right in front of us, right? We see right here, whoops, right there, then right here, then right here, right? We see we get one big move, two big move, three big move, whoops, three big move right here. So I never chase past, like right now, I would not look at all for a buy signal unless I get a retracement, because we are in the third measured move. So I never chase the market as a golden rule. Then after, I am careful for ranges, right? Then after, I wait for a pullback. Then after, I wait for this pullback to be at the 38.2 level. Then after, I look for falling, let's say for a long position, falling resistance, right? All of these, and I have so much more, and you will learn them over time, right? I probably have 10 more rules that has to happen before I allow myself to take a trade, right? All of those rules need to be filled, right? I need to have the green light on all those rules for me to feel confident to get into a trade. Without this, right? Without those rules, then I'm just gambling. I'm just speculating on what's going to happen. Well, actually, not speculating. I'm just gambling, because when you don't know what you're doing and you have no education, you're gambling. And when you know what you're doing, then you're speculating, right? When you've been to school to what you for your craft, you're speculating. Trading a pattern with a setup rule. Well, that's very good. So this is what I'm telling you, John. And I hope that you will give it a try for a week, for 2 weeks, for a month, whatever you feel comfortable with, but do it long enough to see a result, right? Are you being profitable with your pattern? Yes or no? And if you are so, then after, design your trading plan around that principle, right? The least trade amount as possible will give you the highest profitable return that you can have. And that's a golden rule, right? Then after, always plan your trade and trade your plan. And lastly, always manage your risk ratio versus profit. Uh, Very important, because if so, you can give money away. And often with the runners, we won't look at where the market is trying to go, and we'll try to reach targets that are uh, impossible to reach or improbable to reach, just because we're hoping to make a big swing, and then we'll give back money because the market is going to retrace and stop us out. So for that reason being said, let's be careful, right? Pay attention to those details. Write into a journal. You can write into a Word document, or get yourself a journal app, or even a paper journal, but do so to keep an eye on everything that is going on, and on your psychology and your condition, the market condition, and this will improve greatly your trades, right? Now, that being said, we've reached 8:05. The market did not give us any patterns today, so we're going to call it quits, right? We're going to stop our room right now, and we will open up again tomorrow. I hope to see you guys again tomorrow. The trade room is still open until next week for free. So take advantage of that. And then after, it's only $15 per day if you want to, and you only pay the days that you are in the room. You don't pay the days that you are not in the room, right? So anyways, that being said, I hope you guys had a good day. Take care of yourself. Take a second right here if you guys took some trades to go into your order window, right? Look, open up your order window and then make sure that you have no pending orders. Click on cancel to make sure, right? To make sure that you cancel all uh, uh, all the window. Just give me a second. All your orders, so you don't come back from lunch. After lunch, and I'll answer for you in a second, John. After lunch, if you are going to trade, be careful for a meltdown of the market, right? Because it could very well melt all the way back down to the day's previous low. Now, how do we join for tomorrow? You can use the link that you did yesterday. If not, just give me a second. I'm gonna post the link for tomorrow's trade room. Whoops, not that one. Trade. There you go. Webinars today. Let's look into right here. We take a, well, come on. Okay, I'm going to take the big one, right? There you go. And then we paste right there. There you go. So you got the link right here. There you go. Okay. Interesting. Okay, perfect. So until then, guys, take care. Take care of yourself. And please take half an hour to 1 hour and go do some exercise today. Very important. Clear your mind, bring some new blood and oxygen to your brain. And then after, if you are trading this afternoon, be careful, because always remember, most traders that are trading in the afternoons are traders that lost money in the morning. And those traders will often take gamble trades, right? So be careful and see you guys tomorrow. Bye-bye.